One of the questions I am asked most often as a realtor has to do with mortgage interest rates. Why did they go up in 22? When are they coming down? Who's going to help us? What's going to happen with mortgage rates? Well, you can't talk about mortgage interest rates without understanding the Federal Reserve System, the Federal Reserve Bank, otherwise known as the Fed. You hear this all the time in the news. The Fed did this, the Fed said that. Well, what are they? Why were they created? What do they do? And what can they do to influence mortgage interest rates in particular? So over the course of the next 3 videos, we are going to talk about that. We're going to try and keep it short, try and keep it high level, try not to get too far down into the weeds. However, it's a very somewhat complicated and somewhat dry topic. So I'm going to try and stick to high level facts only. If you find anything to be factually incorrect, please drop your source in the comments and let me know. We're going to try and do this without any kind of political controversy because it's a potentially explosive subject, but we're going to steer away from that today. So let's try to first talk about who the Fed is and what they do. So the Fed was created through the Federal Reserve Act of 1913. And if you go to the federalreserve.com or .gov website, you can actually read the whole Federal Reserve Act right here. But why? Why did we need to do this? Well, leading up to 1913, throughout the early history of the United States, particularly through the 1800s, during a period of U.S. industrialization, there were a lot of what we called at the time panics. In other words, something bad would happen in the economy, some bank would collapse, a railroad would go bankrupt, steel mill, whatever it was that went wrong, people would lose confidence quickly and run down to the bank and try to pull out all their money all at once. And that doesn't work because the bank doesn't have all your money all at once. So these were called panics. So folks began to talk about the idea of a central bank. The Fed wasn't the first one that was discussed. However, the Federal Reserve Act is the one that stuck. So you can read the entire act here. You can see all about the Fed explained, who they are, monetary policy, how they help the financial stability of the economy. You can take a look at the map here that shows you all the various Federal Reserve banks, and you can even look on your money. This is a $2 bill right here with a little L on it, and that indicates that that bill was printed in the at the San Francisco location of the Federal Reserve. So you can play around with that all you want and click on these and learn more. And then you can also take a look at the board members, in particular Mr. Jerome Powell, J. Powell, who's the current Fed chair appointed by the president. And that is essentially the involvement of the U.S. federal government in the Fed. The Fed itself is not a federal entity. It's a private bank or a series of 12 banks. The president appoints the chair, and then the chair goes to testify before Congress a couple times a year, and so theoretically accountable to Congress. So by being accountable to Congress, the Fed is supposedly thereby accountable also to the people. It's a bit indirect, and some would argue that it's completely detached, and I won't necessarily get into opinions on that at the moment. However, Mr. Powell does speak here and there, and when the Fed meets, they decide if they're going to raise or lower the federal funds rate, which is the percentage rate at which banks loan each other money, and then banks set the prime interest rate, which has nothing to do with mortgage interest rates. Mortgage interest rates are far more tied to 10-year treasuries, and we'll get into that more later. So that is a bit about why the Fed was created, when it was created, and its core functions. Again, regulating banks, controlling the money supply, and ensuring financial stability and setting that federal funds rate so banks can decide what they charge each other when they loan each other money. Stay tuned for part 2. We're going to talk about points in history at which the Fed has intervened in the economy and more recently engaged in something called quantitative easing. So stay tuned for part 2. Thanks for watching.